We'll sit down with our market analyst this week in a second, but first let's check out the latest USDA crop progress report. Now, the USDA says the nation's corn crop is 68% good to excellent. That's up a point from last week's report. 12% rated poor or very poor. That's the same as this time last week. 5% of the U.S. corn crop has been harvested. And as far as soybeans go, the producers reporting a crop at about 68% good to excellent. It was 66% last week. And at this rate, soybean harvesting will be done before you know it. 31% of the crop is dropping leaves, and that is way above the 5-year average of 19%. Now for wheat, 93% of spring wheat has been harvested. 5% of winter wheat has been planted. Dr. Chad Hart is an agricultural economist from Iowa State University. He joins us now to break down some of the latest numbers in the recent crop report. Thanks for being with us, Chad. And before you give us a breakdown of the market, the big story, especially for those on the East Coast, is Hurricane Florence. How do you see that impacting harvesting, and do you foresee any other disruptions that it could cause?
When you're looking at Hurricane Florence, what we're seeing here is a major hurricane getting ready to impact the East Coast. The big question as far as our main crop harvest is, how quickly will Florence hit, and how deep inland will it finally come in? The latest forecasts show it sort of hovering off the coast and sort of staying well down in either southern North Carolina or South Carolina. So it's not likely to have a big impact on harvest, but if it does move further in, the rain especially could delay some of the harvest of especially the eastern corn belt.
Onto the markets now, and you've had a chance to look at the latest crop progress report. What were some of your big takeaways?
Sure, the biggest things that came out of today's report were just the large yield numbers. When you're looking at both record corn and soybean yields across the countryside, that was sort of the news that the market was sort of expecting it on the soybean side. They were figuring that the corn number would come down a little bit, and that's why we saw the market reaction differ so much between the crops. That record corn yield of over 180 bushels per acre was something that the market wasn't ready for, and that's why we saw corn prices decline about 12, 13, 14 cents today. On the other hand, the soybean market was already prepped for that record yield, and so it was able to bounce back despite having that high yield number thrown at it.
Let's talk about corn and soybeans. How do they look compared to years past, and what do you think producers should expect going forward?
Well, as we look compared to previous years, our prices are down a little bit, not a lot. Probably the biggest concern here for a lot of our producers is not necessarily where the futures prices are, but where basis levels are. We have seen basis levels widen out as we've approached harvest time because of two factors. One is that big crop. The idea is USDA's numbers sort of confirm that a new big crop is coming, but it's also that we've got still a lot of old crops still in storage. That is overhanging the market, and that's caused basis levels to widen, especially for the western corn belt, for both corn and soybeans as we're looking out there.
We got to mention the current trade situation. What do you think?
Trade situation. When we're looking here, we did see some news today that the U.S. and China are going to get back together again and try to work on some trade talks. But probably the biggest thing we're watching here on the trade side would be continued progress on the new drafting, if you will, of the North American Free Trade Agreement. We know we've got a deal with Mexico in place. It's all about, can we get Canada in there as well, and do that hopefully within the course of this month. That way it could be voted on by the time we get to December.
And as we wrap up here, for the last couple of weeks, we've been getting our market analysts to weigh in on the news that the Agriculture Department is offering up some money to certain farmers that have been hit hard from imposed tariffs. What do you think about it?
So what we're seeing there, we're just in the first week of the new program, the Market Facilitation Program. That was the aid that President Trump told us was coming a couple of months ago. We're just now starting to see farmers enroll for that. In this case, it's going to be a nice, let's call it short-term cash infusion into the ag markets, but it doesn't really do anything to solve the longer-term trade problems. This is going to help especially, for producers of soybeans this year, because most of the trade impact, at least as estimated by USDA, fell on them. But we're still really early on in the process. For farmers to enroll, they have to harvest first, and so we really won't see these payments start to roll out until harvest is over.
Probably can't expect this program to solve everything though, can we?
In this case, the program's not meant to make them whole. It is meant to, if you will, help soften the blow. And the way they're measuring this is they're saying, okay, we're just looking at it from a pure pricing impact. And so if you're producing the crop this year, we're going to assume that you've been hurt by the trade stance, and therefore you're going to get a payment under this program.
Dr. Chad Hart, always good to talk to you.